What's up, everybody? Hope everyone's doing well and having a prosperous week. This is the first midweek update for the Double Dippers. All right, so if you recall at the beginning of the week, I was saying, hey, we need to get down towards 40.29. My chart's not updated. I apologize for that. I just got back from rehearsal dinner, so it's been kind of crazy. But we need to get down towards 429, um, and possibly that'll open up that 3900 zone and all that sort of stuff, right? All right, so um, I said, in order for that to happen, we need to get a daily close below 42.75, right? So if we switch to the 1 day chart, you'll see we had our daily close below. We did the little flush lower towards 41.39, well short of the initial 40.29 target I was looking for, right? So I'm going to tell you why. First of all, I think that happened, and second of all, is that still on the table, right? First of all, why did that happen, right? So the way my system works is out here, right? This was a red band violation. The next buy spot then becomes the red, right? And you can see that we never actually got to the red here, which means we never really should have got to this target here, which is the black. So basically, if this had, if this violates the red, then I want this red to hold, then I want the black to hold. All right, that's how you complete a move, right? That's how this whole thing works, right? Even though price is going lower, in terms of sigma, like how strong these moves are, they're weakening, right? They're losing momentum, right? So that's the whole point of the shit that I try to capture. Outside the bands, it violated outside the bands. Now I expect the band to hold here at the red, right? Then I expect the black to hold, right? And then at that point the move is over, right? That's the whole premise behind, you know, how this stuff works. So what happened here is we didn't actually hit this. So that the only reason I think that we didn't actually go down here fully is something along those lines. Either the move to the downside is not complete, which is what I think is probably the case, um, or they're front running it, right? So, long story short, um, we probably still have more downside in store. Okay, so we ran down to 41.39, which is like 100 points short of 110 points short of the 40.29 that I was looking for. We had a big sharp bounce here. This bounce is due to oil. All right. Obviously, we're all familiar. Oil tanked, right? Yesterday, and that was the main reason that we rallied so hard, in my personal opinion. I then told you on the rally that we need above this black line. What's that black line? It's the 8 EMA. If we closed above the 8 EMA, we're gonna go to the 20 SMA. Right? It didn't happen. Okay. So now price is wedged and very tight between these 2 points. It's not trading above this 8 EMA, and it needs to be supported by this 1X Bollinger Band. So this green band right here is the Bollinger Band. All right. So the spot that bears now want to take out is, in entering the week it was 42.75. Now it's 42.50 to 42.61. I'll show you why 42.61 in a second. But long story short, we need a daily close below this again. That's going to bring the targets again back down here. All right. So what are we on? We're on Wednesday, right? Going into Thursday. We got 2 trading days left. CPI tomorrow, a lot can happen. So if you ask me right now, like, hey, Ant, are we going up or down? Uh, that's a really, really tough call. Like, this is not normally the sort of call that I would make. But I would say, even though we had this huge green day, that the move is still down, right? But I'm only going to say the moves down, below 42.50. That's what it takes for me to you know hold a short, if you want to say. Which, by the way, I'm not playing these right now. Right, this is I'll play down here. I'll be happy to go long down here, but like up here, there's too much unknown for me personally. Like, this is not my type of play. But below 42.50, I'm gonna favor Bears. You cannot get bullish until you're above this 20 SMA, which is at 43.40 essentially. Now you can try to scalp. Like I told you, if we had a daily close above this 8 EMA, you can try to scalp that 8 EMA up to that 20 SMA. That's 50 points. I'm not. That's something I might play, right? But we didn't get the close, so it's not for me. But if we start trading intraday, we get an hourly close above that. You can play it. You can see how price is rejecting it, and you could just take profits at the 43.40. But that's not, that's not my particular type of trade. All right, so long story short, I maintain a bearish stance below 42.50, and I would turn bullish again, um, ultimately targeting this 200-day moving average up here, which is now at 44.60. It's gone up. If we were to recapture on a daily close 43, basically 40, that 20 SMA, right? So that's what it's going to take for me to buy a long up in this area. I'll buy longs down here, but up here, it's gonna take that for me to go long. Otherwise, trend is down. We can look at the weekly again that we already witnessed, right? Trend is down until proven otherwise. Here's the 41.27 level, right? As soon as we take that out, it's going to be a wash. We're a 200-point wash. But right now we're kind of in no man's land, right? This took a lot of people by surprise. The only reason I saw this coming was because of energy. Energy was at a spot where it was just too stretched to go any further. That's how I was able to, call for the 11% down. It was just it was inevitable. It had to happen, right? But now that that's happened, it's back to regular sort of trading, right? Now we got to figure out the moves again, right? So if we go back to the 4-day chart, we had our daily close below 42.75. I put 42.61 on here. The reason I did that is if we go back to the 4-day chart, we add our volume profile for every single candle that closed below this 30 moving average. This is the volume profile for that period, right? It's now shifted lower because there's more bears than bulls, and the magic number is now 42.61. So, long story short, we need another daily close below 42.61 now to then start the drive lower again, basically, and reset that whole setup. You can see right now that we just barely closed yesterday above the value area. We closed at 42.75.25 on the dot. There's no coincidence. This area has been a very important area, and we're going to see this 42.61 test, right? And will it act as, well, I'm sorry, it's actually 42.57, my bad. We're going to see that tested, and if that proves to be support, then we can go ahead and start a bounce, probably up towards that 43.40 area. Like I said, you can see this is low volume and everything. This was kind of just an energy rally, I think. So my bias still remains down, but I am not. I just want to point this out. Like, where we're at extremes here, this is not, in my personal opinion, the area to initiate positions. I try to be more picky on my trades. But long story short, If we start getting down here in the 4,000s, I want to go long the indices, right? I want to go big boy long. But we're not there yet. And I'm not comfortable being bullish until we're back above 43.40. All right, so that's where we're at. We take a quick look at oil. You can see we had TD9. We took a big old dump, and we are trading down here. This is the new important level for oil, 109.98. We've been pretty much trading at this level all day. We're consolidating right now at this level, right? So this is the level that the bulls need to break. This is what I was looking at on these intraday swings earlier today. We caught this dip, we sold up here, quick profits. We tried again over here or something, we got it up to here, but that's what it's going to take, right? They gotta take over this level. So if they can do that, then the highs, the highs, the previous highs and everything aren't on deck. But would it surprise me here if we do some consolidation? If we're going to have like another immediate impulse back up to it's like 140 over like the next week, it probably needs to happen. This is probably going to be an inside bar today on Thursday, the 10th. It'll probably be an inside bar, and then we're going to move from there based off tomorrow's action, right? But the moving averages are moving up, so it wouldn't surprise me if we get this 20 SMA test pretty soon. Actually, that's 20 EMA, I'm sorry. But ultimately, this is the level, 109.98, basically 110. Bullish above and below it, we've got downside of another, 6% or so possible, right? This is going to go higher tomorrow, right? So that number will probably go down to 4%. So, you can, if you're bullish, you can probably buy at that 20 EMA, but I'm not going to be playing this either, right? This was just, I played this down, that's all I was looking for. In the next couple of weeks, I'm expecting it to ultimately resolve higher, up towards this 140 area. That's when I want to play the down again. I'm not interested in playing this chop here and trying to catch the bullish impulse. That's a fool's game, in my opinion. So I'll let the move play out, resolve itself, and ultimately look to take another short. That's pretty much all I got on my radar, folks. We've had a ridiculously good couple of weeks. I hope everyone else, profited as much as I did. And, hopefully next week there's some really good trades again. But like I said, I don't really want to get, I'm not really interested in the indices right here. I need to see us, either significantly higher or significantly lower to play these levels. That's just how I trade. So I hope the information is still valuable to some of you guys, and I'm going to be busy over the next few days as I go and get married. So it's pretty crazy. So half session for me tomorrow, and then hopefully back to normal next week. All right, guys, stay safe, set stops. Have a good one.